Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone of having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. So today's update will be about the last week of May. So as you can see, at the end of last week, we were at £101,831. And at the end of this week, we're at £104,480 for a 2.6% gain, which equates to £2,649. So if you watched the video last week, I saw Trump imposing 50% tariffs on EU as a way to get them onto the negotiating table. The market dipped and I bought a bit of that dip, and the EU did come to the negotiating table, which meant that the market rose. I wasn't expecting it to happen as quickly as the next business day, but it happened. The EU came to the negotiating table, said that they are willing to strike a deal, and this led to the market moving up. But later on in the week, the tariff saga re-emerged. Basically, the Senate ruled that Trump's tariffs were not permissible, and they gave him 10 days to rescind all of the tariffs. However, the markets dipped again on the news that Trump decided to appeal. So Trump tariffs get to stay in place for now. What happens next? So the court is going to be ruling against what they intend to do, and so the tariffs will continue until July the 9th. And this caused a dip in the market to continue until the end of the week. And some new news that right at the end, and it usually happens on a Friday, it seems, that Trump has deemed that China is not playing ball or has reneged on some of its promises regarding its deal that it struck. So we will see how that affects next week. But overall, a good week, so up 2.6%. There were a few earnings reports that involved a couple of my stocks, and this includes the main one, which was Nvidia. They had a really good earnings report. So revenue was 44.1 billion with analyst expectations of 43.31, which is up 12% from the previous quarter and 69% from a year ago. EPS was a beat as well, with 81 cents, with revised estimates of 73 cents. Initially, it would have been 88 cents, but there was some charges related to some of the restrictions of Nvidia's ability to sell chips into China, which the market agreed would affect its earnings, and there was a revised estimate, which it beat. The stock rose about 4 to 5% in after-hours trading. Afterwards, the key highlights of the investor call was they intend to release new chips annually, which means there'll be likelihood of more stability on their revenue numbers, including a successor to Blackwell and advancements in new networking technology like Spectrum-X. They acknowledged the rise of Chinese AI, such as DeepSeek, but Jensen Huang, the CEO, suggested that advanced AI models require significant compute power, and this would continue to drive demand for NVIDIA's chips. The other thing that was quite interesting to me and important is that NVIDIA is diversifying its customer base. So it's not just going to be big tech. It's also highlighted that there will be a lot of revenue coming in from the automotive sector, probably in the region of $5 billion, and also healthcare. So they talked about partnerships with companies like IQVIA, Illumina, and Mayo Clinic. Also, enterprise software platforms such as SAP and ServiceNow. So this is good. This is important in terms of diversification of their revenue stream. For me, $40 billion a quarter is like about $500 million a day of revenue. In long term, how likely is this to continue? And NVIDIA is still quite bullish on that and citing things like humanoid robots and autonomous vehicles. So that was a good overall earnings. The second earnings was for Costco. Again, two beats. So revenue 63.21 billion against expectations of 63.19, a very marginal beat. But that's because Costco keeps the market updated with its revenue numbers, so analysts can get a very close guidance on what they expect to happen. Earnings per share was 4.28, beating expectations of 4.24. Now, the key highlights from the investor call was they increased their membership fees in September last year. It went up by 17.2%. The market was okay with that, so they had a 90% renewal rate. I am also a Costco member, and I'm staggered at like how busy that place is all the time. Like, especially on a Saturday, you cannot go there. The queues, like in my branch, there's usually like 15 tills open, and it's just like queues snaking down. So memberships overall grew 9%, and this amounted to $1.24 billion of pure margin. So this is pure profit for them, and they can keep raising these memberships as they see fit. The cost savings that customers get means that they keep coming back. Now, in terms of tariff volatility, the CEO emphasized Costco's flexibility to swap products quickly to maintain competitive pricing, positioning the company to handle tariff volatility better than most retailers. Off the back of that, the shares rose from $1,000 a share all the way up to $1,050 and settling at $1,039 a share. So this is a company that keeps growing. The PE ratio is quite high at 60, but it still keeps beating. If you look at last year's performance, it's up 28%. So it has done really well. Now, some news with regards to one of my newer holdings, HIMS, which was down almost 20% from the last video. And the share price rose due to HIMS cutting 4% of its workforce. Now, from time to time, companies make job cuts to become leaner and more efficient, and this is what HIMS is doing, and the market reacted quite well to it. Now the company said it's also looking at new areas and new markets, and this includes low testosterone and menopause treatments, which if they execute well will increase the revenue stream quite well. Now, as you saw at the end of the week, shares went from 52 all the way up to 57 and settling at $56. No dividends for last week. So we stay at total dividends of £6,619 since I started investing in April 2021. May is not usually a big month for me generally, but next month, June, usually is. So I'm expecting a lot of dividends next month. Now let's look at the portfolio's performance overall. Google, as we flirt again to getting back to green. Again, it happened during midweek when it was in the green, but then with the tariff announcements and the market movements, it settled at 171, which is just a smidgen under breaking even. But I'm getting really excited when Google is going to stay green for me, which is not long around the corner. MicroStrategy down 1.53% as Bitcoin dropped this week. Visa up 17.45% for a £1,358 gain. MasterCard up 11.92% for a £913 gain. These two companies are staples in my portfolio right now. I expect them to grow 20% every year pretty much. Imperial Brands up 58% for a £3,000 gain. Meta up just under 10% for a £655 gain. Tesla up 57% for a £2,329 gain. Very exciting times because they're due to launch the robotaxi on the 12th of June, I believe, and they've already got some of them on the ground operating to see how it goes before the wider launch. Microsoft up 16.91% for an £846 gain. Carnival, the cruise company, up 61% for a £1,754 gain. HIMS down 14%, but it was down just under 20% last week. But as I mentioned earlier, with the streamlining of the workforce or the job cuts, there was a 5% move in the shares. Amazon up just under 7% for £244 gain. Nvidia doing really well in the earnings, up 58.8% for a £1,218 gain. Elgen, oh my God, finally we're seeing green on this stock. This stock has been, it's just flat for the whole year, but it pays a very big dividend, and this is why a lot of people hold this stock, and I'm finally in on the green. I'm due for a, I think, maybe like £180 dividend next week, I believe. So excited about that. AbbVie up 20% for a £529 gain. Centrica up 44% for a £904 gain. Rio Tinto down 17% for a £563 loss. Again, a good strong dividend payer. I am up overall with, if you factor in dividends for this company, but in terms of share price, it's down. Broadcom up 71%. Now, a special mention to Broadcom. Look at the monthly performance for Broadcom, 25.7%. This is a company that's done really well for me for the last year, up 82%. And I am up 71% overall. Apple up just a little bit for a £28 gain. Costco with a good earnings up 29% for a £553 gain. KLA down 6% and ASML down 18.2%. So as mentioned, if you're enjoying the content, enjoying my journey, please, if you can give the video a quick like so other people can see it and follow my journey too, that would be great. So again, a summary, up 2.6% for the week, a really good week. Trump causing volatility again in the markets, but let's see if he gets blocked from imposing these tariffs, it might lead to more long-term stability, which is what we kind of like as long-term investors. So yeah, thank you very much for watching, and I will see you on the next video.